Well, hello everybody. Hey, thanks for watching this video. My name is Nick Beveridge. I am a real estate agent with Keller Williams Realty, and I'm also a real estate investor. I've been doing this for a while, and I thought I'd shoot a video today showing you the steps of how to get a hard money loan, what a hard money loan is, and also in order to get to that, I wanted to kind of go over the topic of money. So this is geared towards kind of newer real estate investors or maybe experienced real estate investors that haven't used hard money before and have some questions about it. So I hope this helps. Let me share my screen here. Here we go. Oh, that looks crazy. Boom. Hopefully this helps. All right. Let's start here. So hard money loans. Again, yeah, my name is Nick Beveridge. I've been a real estate broker for about 12 years now. I've been an investor for about 10 years. But actually, I invested, I guess 15 years ago, I bought my first investment property and it didn't turn out well. So I kind of take the first 5 years and I scratch that. But anyway, been a part of over 100 builds, flips, burrs. I've got over a dozen rental properties. I have a real estate team of agents, and they help me do over 100 transactions a year. They work a lot with our buyers and sellers. And the awesome thing about my team members is that these agents are also all real estate investors. So if you're ever in the North Idaho area and you're an investor and you want to work with a savvy agent, I got to tell you, our team is the way to go. And I've spent thousands of hours at real estate investing seminars and training events and yada, yada, yada. So I feel like kind of seasoned at this point where I can kind of talk on the topic of money and real estate investing, especially residential. I am not that experienced with commercial, but residential properties, I kind of have my way with them now at this point. So anyway, also, yeah, here's that team, by the way. We just got back from Mexico. This was our 4th annual trip to Mexico. It's our team with their spouses. We have a great time. This time we went to Cabo. We just got back, and we are ready to work for the rest of the year so that we can go back to Mexico next year. That's the goal anyway. We want to sell 200 transactions. Our website is northidahorei.com. If you're in the North Idaho area and you ever want to come to one of our free meetups, we have our next meetings right here. The first Thursday of the month is where we do our general open to the public meeting. The second Thursday of the month, we go up to Sandpoint. And then the third meeting is the third Thursday of the month, and that is back in the Coeur d'Alene office where we talk about the out-of-state investor topic. Anyway, let's get back to hard money loans. All right. Before I dive into hard money, I want to talk about money in general. That way you can have a real firm understanding, if you're not there at this point yet, on what money is. I want to change your thinking about what it is. Learn about securities and what protects money from the elements, and understand inflation and how you can use it to help you grow your net worth. Inflation, for most people in this country, is a bad thing, but for real estate investors that use leverage, not so bad. So again, let's take a break from what you think you might know about money. I want you to open your mind and soak this in if you haven't heard about this topic before. What I'm going to talk about might offend you, so just brace for that. Now, I want you to start thinking, if you can, if you're open to this, money is just like water. Some people will say money is water. So have you ever heard of the term currency? It's another term for money. Think about a river current. And with a river, what do you have that controls that currency? Typically have river banks, right? That control the current of the flow of water. Think about cash flow. Think about the term slush fund. You ever heard people say, let's pool our money together? Let's get a lot of money and bring it together. Pool. The really smart financial people out there, they want multiple streams of income. Streams. I'm sure you've heard this. Let's make it rain, especially you've been at the strip club. They're talking about dollars. Make it rain. Wealthy whale. Have you ever heard of that? Maybe in a casino. The whales are the ones that have the most money. Trickle down economics. I took a bath. Maybe if you had a bad investment, you might say, man, I took a bath on that. But, or you're just dumping money down the drain. Maybe you go to a loan shark. What does a loan shark want to do? Well, they want to turn you red and pull you underwater, right? And think about it. If you are, if your bank account has a red number, it typically means it's negative. Red for blood. Underwater. Not a lot of homes in this country right now are underwater, but a lot of them were just a decade ago. You might want to try to stay afloat. You heard that term? I'm just trying to keep my head above water. I'm drowning in debt. Bailout, government bailouts. Bail. Or if you've been really bad, maybe your assets get frozen. And that is where you can't move your money because it's frozen. Frozen assets. Or maybe your funds dried up. Think about a pond that dried up. The water's not there anymore. And to hit the nail in the head as hard as we can, liquid assets. Oh, geez, that's money, right? Liquid assets. Okay, so why does any of this matter? Well, the dollar used to be secured by gold. Gold is a hard asset. Just like a sealed bottle of water. Think about water, money, being protected, maybe by a plastic bottle of water. So that's its security. In 1971, the rules of money changed. Saving money no longer became an effective strategy to become wealthy, and quite the opposite. So in 1971, that's when they took the US dollar off the gold standard. So the US dollar was no longer secured by anything. It was like basically, well, we'll get to this, but so let's talk about a fiat currency. A fiat currency is a government issued currency that is not backed by a commodity, such as gold. There's no security to it. The fiat money gives banks greater control over the economy because they can basically just control how much money is being printed. So now the government can print as much money as they want, but just think about like a tap, like this fire hydrant just spraying all over the streets. This is money. Yes, there's a lot more of it out there, but it's not protected. It's just being sprayed out there and it will go away. Think about water no longer being protected, sealed, or bottled. Okay, and look at this graph. Look at this graph. This is from 1913 to 2020, and this is the cumulative inflation. Now, what you'll notice is that we've kind of always had a little bit of inflation, and then it went down, a little bit of inflation, and then, oh, what happened here? In the 70s, things shot up. Do you think that might have something to do with maybe it's not backed by gold anymore? And look, it doesn't really have these swings up and down anymore. It's just going up, up, up. Big surprise. So think about this. Most people in the U.S., they invest in the U.S. dollar. They get paid in the U.S. dollar. They hold the dollar. And it just gets weaker every year. So if your plan someday is to retire and you think just saving the U.S. dollar is going to get you where you need to go someday, oh, Look at this graph. Just try to soak it in. In 1913, the dollar valued back then, today would have the same value of 3 cents, or the same purchasing power of 3 pennies. And this graph was before this massive new wave of inflation that we had. This is from 1913 to 2020. Think about all the massive inflation we had from 2020, 2021, 2022, and now we're in 2023. I bet you this figure here is probably a little lower. Inflation is a hidden tax that destroys purchasing power. Inflation destroys savings, stocks, bonds, equity, even equity in your real estate. But it also destroys the value of debt. And this is what I want you to try to sink in. The value of debt gets destroyed over time with inflation. Inflation is like the natural evaporation of standing water. Okay, that was a lot, I know. Thank you for hanging in there. We're going to talk about hard money now that you know what a secured asset is and an unsecured asset. So let's talk about hard money, what it is, when and how to use them, and some examples. Okay, so a hard money loan is a loan from a private or non-traditional lender. The asset being purchased, or house in this scenario, the house being purchased is used as collateral for the loan. So it's a loan that is secured by a hard asset. That's all it means. Hard money loan means like a hard asset. So you're getting a loan on real estate, like a house. But it's based off that security. To go into this a little bit further, you have secured loans, such as what we just talked about. You get a loan for some property, and that loan is secured by the property. If you don't make your payments, guess what? The lender gets to foreclose and take that property back. There's some security there. Now, there are loans out there that are unsecured. Here's some examples. A personal loan. You go to the bank and you say, I need $2,000, and they may just give you a loan for $2,000. But if you don't make payments, there's not much that they can do. They might just lose that money. Same with a credit card. You might have a credit card with a $10,000 limit. You can run it up, and then you can default, and there's nothing that they can come do. They're not going. If you go buy a motorcycle with a credit card, they're not going to come take your motorcycle because it wasn't secured by the motorcycle. It was secured by your personal credit score. Student loans. Student loans are unsecured. You can, well, this is a bad example because you can't really default on student loans. You have to make those payments. They will garnish you, and you can't bankrupt on them. That's a bad loan, but it's unsecured. They can't take your college education away from you. Medical bills. They're not going to foreclose on your new heart transplant and come take it out of you. But here's secured loans. Mortgages. We just talked about that. You stop making a payment on a house, the bank just takes the house. Home equity loan. Same thing. Car loan. You stop making your payments on your car loan, repo man shows up, takes the car back. That way the lender has some sort of security. Business loan. You get a loan on a business. Maybe there's a bunch of equipment. You go in default. That equipment belongs to the bank. Okay. Here's what a hard money loan is not. And this is what a lot of newbies get confused. A hard money loan is not a down payment for a real estate investment. It's not help with the down payment. That's where you come in. You got to bring a down payment, or a friend or a family member. The cool thing about hard money is it doesn't have to be you, but the hard money loan is not to help you get a down payment on something. A hard money loan is not for your personal residence. It must be for business purposes only. So, this pretty blue house, if you want to move into it, you want to get a hard money loan? No, that's not what this is. This is a commercial loan not for you to move into. You want to buy this house, fix it up, and rent it out? Sure, no problem. You want to buy this house, fix it up, resell it? Sure, no problem. But you can't live in it. It's not for personal use. Because a lot of hard money lenders are not licensed. And if they do a loan for personal residence, they could be fined due to the Dodd-Frank Act. Okay, a hard money loan is not to be used in a second lien position. A hard money loan needs to be in first position. At least our loans that we lend out, and almost everyone that I hear about, they need to be in first position. So what I mean by that is there can only be one loan first. If you buy a house for $100,000 and you get a hard money loan for $80,000, there better not be another loan already on that house when you go to buy it. Or that loan has to be paid off. A hard money loan is not for broke people. This isn't this is a tool that real estate investors use to acquire properties that maybe are in horrible condition, that need some sort of improvement. It's a short-term loan, but it is not for people that don't have money, because hard money loans are expensive. You need to make payments. Not always, but most of the time. Hard money loans are meant to be quick, convenient ways to purchase real estate investments that make sense, but they are not for broke people. You will go broker if you have zero money and then you get a hard money loan on an investment project. But I have done it. I've defeated those odds before. It's possible, but I don't recommend it. If you have zero money and you want a hard money loan, partner with somebody that has some money, because you're going to be spending money regardless on this house that you buy. This is what hard money is ideal for. Hard money is ideal for fix and flip properties. Something that you're going to be in short term, like 1 year or less. Hard money is also ideal for the BRRRR strategy. Buy, rehab, rent, refinance, repeat the process. Buy with a hard money loan. Fix it up. Maybe the hard money loan can give you the fix-up money too, depending on how good of a deal you got. Rent that out. Then you go refinance money, go into long-term, because these are 1 year loans typically, with the option to extend. But the whole point is to acquire a property that needs improvements. You make the improvements, and then you get out. Hard money is also ideal for new construction. If you have some land and you want to get a hard money loan for the construction, you can put a lien on that land with the hard money loan, and then you'll have construction funds. And I think I've already said this. It's ideal for 1 year or less. Okay, so this is what matters to a hard money lender. The 5 C's. Hard money lenders typically, at least we do, we like to see that you have some capital. We like to see that you have some good characteristics of your nature. Conditions, capacity, and collateral. Do you need to have all this stuff? No. Would it help to have some of these things? Yes. Let's say you only have one of these things. We might still do a loan for you. But these are what we look at. We want to see, are you capable of doing a project like this? Do you have the time? Do you have any experience? Do you have anybody on your team that has the experience of doing a real estate fix and flip? Because it's a lot of work. Do you have the capital in case things don't go right? Or do you have down payment? Or do you know somebody that does have capital? It doesn't have to be your money. Do you have the collateral? Like, does the property actually meet our loan to value guidelines, which we will get in here? Loan to value. Okay, this is mainly what we look at when we're determining if we will do a hard money loan or not. We want to know that LTV, loan to value. Loan to value. So to get to loan to value, you take the loan amount that you want and you divide it by the appraised value or the current market value. And that's how you get loan to value. What's ideal is 70% or less. That is what a smart investor, I believe, sticks with, and they don't go above that. 80% is okay, 90% would be too risky. 100% out of the question. So this is what I mean by that. If I'm starting to lose some people. Let's say you're buying a house that is worth $100,000. If you come to us asking for a loan of $70,000, we might do it because there's a 30% margin in that deal, margin for error, resale costs, that kind of stuff. 80% might be okay. If you come to us, you have this house that's worth $100,000. You can get it for 80, or you can get it for 80, or you're bringing 20 grand down. You're buying it for 100. Maybe it's worth 100. You're buying it for 100, but you got 20 grand down. We might do that. 90% too risky. You're buying a house that is worth 100,000. You can get it for 90. You don't have any money down. Dude, it's going to be too risky. Something's going to happen. 100% out of the question. Example 1. Here we go. Let's look at the snake house. This was my very first hard money loan I ever got. And I've gotten, I think I've gotten around a little over $10 million in hard money loans over the last 10 years. This was called the snake house. It was referred to me by an off-market source. Rathdrum, Idaho. This was a fix and flip. It was my first fix and flip. The condition of this house was basically cosmetically just destroyed by meth heads. It's what the living room looked like, very lovely with the torn up couches. The bedroom, it came that way with the ripped wallpaper and the mattress thrown up against the wall. Pretty nice. Yeah. Pretty cool looking house, right? Oh, and it had a snake room. That's why we called it the snake house. Okay. So when I talked to the seller, this was my negotiation skills. I asked if he would take 43. He said, how about 45? I said, okay, I'll buy it. I won't get into that story now because we're talking about hard money loans, but there's a bigger story to that. I'm going to skip through this, but I did get an inspection. I got a contractor bid. It came out to 40 grand. We paid for an appraisal. That home, it appraised for 65,000 as is, and the after repair value was 115. So here's what I brought to a hard money lender. I had a scope of work. I had a home inspection. I had the appraisal with the ARV, and I had an organized LLC. I got shot down by so many investors at that point, but this was 2014, I think 13, 14. Not as much lucrative, not as much money out there. There's a lot more money these days, more available, but I had no experience. So I got shot down by a lot of people, and I had no money. A lot of people wanted money down, which I get now. It's been 10 years. I totally understand why people said that. So I called the second private lender, and he said, you're not experienced enough. Third lender, hey, you have no skin in the game. Sorry, no thanks. The seller had delays with probate, so it actually bought us more time. I was able to really try to find this money. 4 months later, the seller's ready to close in 2 weeks. I still was getting shot down by lenders. I even had a very seasoned old neighbor of mine, 45 years in real estate investing. He walked through it. He thought it was a great deal. I asked him to partner, and he said no. It wasn't in his criteria of homes to flip. So I eventually went to Craigslist, and I found a hard money lender. This is what we agreed on. They do the loan plus $5,000, but we had to come up with $1,000 at least. We had to have some skin in the game. So totally, we made it happen. Our loan to value on this purchase was 67%. After the fix up, it was 43%. So we had a lot of margin. 2 weeks later, we started work. It was a very quick closing because they didn't need an appraisal. We already had one. Found a buyer within a week of doing repairs. I won't do that anymore, by the way. I wait till the houses are done, and then I put them on the market. 2 months later, we sold it for 120 grand. So real simple cosmetic fix. And this was the first time I ever did construction too. Anyway, so we sold it for 120. Our total repair cost was 11,500. You remember that bid I got for 40 grand? That bid was not out of the questions by any means. We just didn't do as much stuff, and we did all the labor ourselves. And I think we paid a guy $2,400 to do really hard stuff. The loan fees that we required back then, $9,000 total. Closing costs, $9,200, paying real estate agents to sell it. And we had a net profit of $44,800. It was really awesome and life-changing at the time. All right. Escape from that. Here we go. All right. Example 2. So this slideshow is a little bit old. This is about a year old. It says current fix and flip. It's actually under contract now, and I had a lot of stuff go bad this year. The market kind of fell. We had a lot of contractor issues, but we finally got this thing under contract at $480. So these were the numbers back then. But the purchase price is $400,000, repair budget $12,000. Title, escrow, lender fees, 20 grand, 3 months of interest reserves, 11,000. Total full loan amount was 445. After repair value was 550. We had a loan to value at the time of 80%. And then the market fell. This was at the peak of the market. So you follow this YouTube page and I'll show you examples of what happened to that property after it's done. But that's what it looked like initially when we underwrote the deal. All right, so cross-collateralization is what I used instead of out-of-pocket cash investment on this one. This one, I didn't bring any money down. I had a rental that had plenty of equity. So what they did was they just put a second lien on the rental that I had. So in case I ever defaulted on this loan, they might have a claim on that rental that they could force me to sell it, and then I just pay them the difference of whatever money they may be lost if I defaulted on this. So it's secured all the way around. But it was a great way for me to jump into a deal with no money out of pocket. Okay. So I've personally taken over $10 million in hard money loans over the last few years. And when it comes to what I'm doing right now is I'm telling you, we offer hard money financing. If we say no to you, it's probably because you shouldn't buy the deal. We have access to over $250 million to lend from. So please let us know if you're interested. And this is how you can let us know. Go to our website, northidahorei.com. And this tab over here, funding, all the way on the right. Go ahead and just put your first name, last name, email, phone number, and hit apply if you'd like us to get back to you. Or if you already have a deal in mind, click the apply for funds. Tell us when you need the money, how much you need, what's the address of the investment that you're interested in buying or funding, or a refinance. How much capital are you willing to put in? And just give us a rough idea of your credit score. It doesn't mean that we're going to pull it or anything, but we just want to kind of have a rough idea. And then any details in here, hit apply, and we will get back to you. I hope this kind of helps you understand hard money a little bit better now. I'm going to stop sharing my screen here. Whoop. There we go. All right. I hope this helps you. I hope you learned something about hard money loans and maybe money in general. If this is of value to you and you think others would like it, please do me a favor. I'm trying to get like over 100 subscribers. I'm just kidding. I think I've got 100 or so. It'd be nice to get more people. Share this with people you think will find value from it. And if you have any recommendations on a future video, let me know. We also do podcasts. The Investor Shed podcast. We put out weekly investments. We put out weekly. I'm getting a phone call, so that's why I said investments. We put out weekly podcasts on Thursdays mornings at 5 a.m. So you can follow us on the Investor Shed podcast on YouTube or wherever you listen to your podcasts. Have a great day. Bye.